Now, Nigeria shifts from direct economic intervention to a capital de-risking and private sector-led growth model as part of the country's 2026 growth acceleration and investment mobilization strategy. Tilewa Adebajo, the Chief Executive Officer of the CFG Advisory, joins me now for more on this and the outlook for the economy. Thank you so much, sir, and great to have you on the show today. Still in the Happy New Year season, so I think we can say Happy New Year. Welcome to the show, sir.
Thank you. Good afternoon.
Yes, now let's start off with this shift here. What sort of risks and opportunities does this policy pivot present for Nigeria when we are looking at the medium to long-term growth trajectory? What does the picture look like from your lens?
Well, I think in the beginning of the year, the Minister of State for Finance put out a growth, acceleration, and investment mobilization strategy.
Yeah.
And I think what she did in putting that out was to outline all the policies that will anchor the growth development strategy in terms of this year, in terms of looking at policy support for their growth strategies, to obviously look at productivity, investment, and all in an effort to drive growth and productivity. So I think that strategic framework, I think, is looking at more on predictability, understanding the certainty of government, and to be able to provide some support, because government in itself does have challenges.
Yeah.
The total government debt is now in excess of $100 billion, which is a record high. Government is struggling to fund its the debt financing. Close to 65 to 70% of revenues is going towards debt service, which is quite significant and also unsustainable. So I think these are strategies they're looking to put in place to unlock this and to be able to provide government the necessary room to be able to perform. As you know, they also have challenges with budgets because the budget revenues are not
Pretty tight.
the budgeted numbers, are being disappointed by the actual numbers in terms of revenue performance. They're not meeting their budget revenue targets, which is resulting in a massive deficit of, you've seen, 23 trillion from this year's budget. So there is a significant need for paradigm shift.
Yeah.
And if you're going to grow the economy, you're going to have to invest. And last year, the government did not fund its capital budget. And we all know that it's the capital budget that will provide the necessary stimulus and the multiplier for growth.
But I'd like to feel your pulse now in terms of your level of optimism when we're looking at this policy, whether or not you think we can achieve the right balance in terms of balancing risk management without also crowding out private capital or assuming contingent liabilities. And then when we look at the case scenarios, from guarantees to blended finance, the role of DFIs, what should be our strategy in terms of execution?
Well, I looked at those numbers, and surprisingly, actually, the lowest it has been in the last 5 years is that the private sector has about 65% of total credit available to the system. Right now, I think that number is close to 70%. So we do not really have those crowding out challenges.
Okay.
What we have really is a situation whereby, because interest rates are high, the private sector is unable to access credit at those rates. That is really where the challenge is. So it's important that the disinflation strategy succeeds, and we're getting to a level of interest rates whereby the MPC can begin to cut rates. Because even if the private sector can afford the credit and it's available at 30%, nobody's going to, there will be not too many takers that. So we need to see lower interest rates. So the government is not really crowding out. Government in itself just has its own internal issues because its own debt numbers are no longer sustainable.
And talking about sustainability of the economy as a whole now, I'd like your take around this latest move we are having from the government. You talked about paradigm shift, and I know this is one of the recommendations you made early last year, talking about the asset sales privatization, this 189.16 billion naira target. What do you make of that? And then when we look at the fact that this is our biggest budget in terms of nominal terms, do you really think this sort of move helps us to keep us out of the woods from the concerns that are long-standing?
No, no. If you take a look at that number, it's not even $1 trillion. The deficits this year alone, as we've said, is 23 trillion. So you need to make major moves, not only privatizations, but also concessions. You need to sell down the JV assets. Government needs to really put together close to about 30 billion US dollars, because we no longer have buffers to be able to absorb any downsides to the external shocks or even the internal shocks we face. For the first time in Nigeria, Nigeria's sovereign territory has been breached in the sense that the US government, with their Navy, sent strikes there. We need to understand that we're going to face significant risks going forward because the Americans are threatening more strike. You see what's happening in Venezuela. So it's important that government begins to restructure its balance sheet and begin to optimize more equity as opposed to debt within those balance sheets. And that fiscal responsibility, I think, is a key priority.
And we can't make big mistakes at this point now. I'd like your take around safeguards when we're looking at transparency, competitiveness, and even value realization of these privatization processes we have in the works at this moment. What's your response?
I don't have a problem. I think the Bureau of Public Enterprise has had experience in privatizations. I think they're consolidating the Bureau of Public Enterprise and the ICRC, which is the Infrastructure and Regulatory Commission. I think that's where you need to see more synergies because they have a very cumbersome process. But I think the Bureau of Public Enterprise has enough experience in terms of privatizing assets, and I think they've learned from their past mistakes. So I think that process now is going to be very smooth.
Okay, let's now measure the success of our 2025, the estimate you had for the 2025 performance, economic performance, and the sort of picture you see forming for the year 2026. We've looked at the investment climate, you've raised certain recommendations to the government, but now when we look at the outlook for 2026 across key indicators, how do you see the year unfolding for us?
Well, I'm cautiously optimistic. And the reason why I say I'm cautiously optimistic is once again, you've seen what we've been able to achieve on the monetary side. So the question now is that with the gains that have been made, again, everything goes to government. The clear and present danger and the risk to economic reform or to consolidating the gains of these reforms for the last 2 years and the stability we've achieved is the government itself on the government spending. There is fiscal recklessness which needs to be contained. And government's budgets are over-ambitious. And it is clear that, you make these lofty projections, but you're always falling short of the revenue. Capital projects with the right stimulus and more. If a government is unable to fund its capital expenditure budget for the previous year, then we're not going to grow the economy. Because right now we need to consolidate on the gains and we need to grow this economy 8 to 10% a year. We already have about 140 million Nigerians now in poverty, and it is economic growth that will lift them out of poverty. So I think we need to shift that focus into how we're going to grow the economy. And again, all this is dependent on how government policy will pan out. So the Minister of State's plan on the growth strategies for investment, job creation, and productivity is very welcome.
Looks fantastic on paper.
Yes, so it's now a question of we need to implement it. If we can implement that policy document, then I think things will improve.
Okay, now we have the continued implementation of the PIA. We are looking at the tax reforms also taking shape here. We are looking at expenditure rationalization. From the CBN, for example, now 4.49% for the year 2026, inflation to moderate 12.94%. I was asking a different analyst sometime last week. I said, do you think we could possibly have the sort of disinflation trend Ghana was able to achieve under the current scenario we have here? And that was a really dicey subject. But let's talk about, I know your report is not yet out, but just give me some insider information we should expect.
Well, I'm cautiously optimistic, but I think that the Nigerian economy will go in excess of 5% this year. I think I'm confident about that. And I think in terms of GDP growth, because of the cumulative success I think that has been achieved in terms of stability. So now, once government begins to articulate their policies, as you've seen, it is clear that inflation has reduced significantly, whichever method you look at it. If you take a look at the adaptive gap methodology, which the CFG Advisory uses, inflation is now about 22, 21%. The National Bureau of Statistics is looking at inflation close to about 12, 13%.
Yeah.
And hopefully they're saying that this year, by the end of this year, third, fourth quarter, we should be able to see single-digit inflation. But so whichever method you look at, I think it's clear that the path of disinflation is positive. And I think inflation is definitely on the decline. So I think that's a positive. So, but the key signal is the fact that the Monetary Policy Committee has still not cut rates significantly. So if you take a look at the rates now, inflation is about, what, 13%? And the MPC, MPR rate says 27%. So there's still a disconnect there. So we don't know why MPC is what they see and what we don't see. And you also have to understand that by October of last year, foreign portfolio investments has already crossed $21 billion, which is a record high and a massive recovery. So I think that foreign portfolio investments by the end of December could hit close to $25 billion US. So what we will see this year is continued foreign exchange stability, which will stimulate growth. And of course, that's why I'm confident on about 5% GDP growth. And you can see that the oil industry is beginning to come back on stream, another strong year, and other sectors of the economy is looking at recovery. But we must say also that this is not the growth for a population size of Nigeria. Nigeria needs 8 to 10% GDP growth to be able to lift people out of poverty. But the positive impact of inflation is the fact that it will restore purchasing power.
Mr. Adebajo, it's always a pleasure having the sort of conversations with you. We'll leave the conversation here for now and definitely catch up at a later date. That was Tilewa Adebajo, the Chief Executive Officer of the CFG Advisory.